is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. And there's lots of treasure to hunt for today, folks. Welcome. I'm Steve Rhodes, host of The Trader's Edge, and thanks so much for joining me. I absolutely love being here with you. And, you know, this week it's all been about strategy. It's always about strategy, or it should always be about strategy. Tactics, folks, 20% of your life, but most of us spend time, 80, 90% of our time in tactics, if you will. That'll just muddle you down, and we want to get you out of that quicksand. We want you to focus on strategies, and so we're going to take a look at the markets. You know, the strategy, though, what I want you to think about, you know, today, over the weekend, is that life is an invitation, folks. And that means that we're inviting you. You know, this is a great life. We love being here. We love being with you, and it's an invitation to be with us. You don't even have to RSVP. You just got to show up. And if you show up, we're going to teach you something. That gives us the opportunity to teach you on TigerTV. So if you go to the homepage of TFNN.com, you'll see a button up at the top. You can click on that for TigerTV, or better yet, over on the right-hand side, you'll see a little area, got some red bordered around it, and click on that. You can install that link on your iPhone, your iPad, your Android device, if you will, and then you can see us live streaming, even if you're at work right now. And if you're at work listening, be careful. You know, make sure nobody's looking over your shoulder, or maybe you are the boss, and that's a real reason to tune in here. That's a real reason to understand. When we were talking earlier this week, we were talking about constraints. I just want to make sure you understand that the only constraint you have in life, folks, is yourself. No constraints in the market. Let's go take a look right now. You know, and what I like to be able to do is change the show up. So on mornings when you got volatility, up or down, and this morning right now you've got the Dow futures trading up 103. NASDAQ futures up 23, ES Mini up 11 3/4 point, the Russell up 12 points, King Dollar. So here we got a little bit of a divergence, if you will. You got King Dollar's up 29 ticks. So we'll take a look at the euro or anything else that you'd like to. 877-927-6648. You got gold is down $6, silver down 16 pennies right now. Light sweet crude trading out at 96.75, and that is up 41 cents. Now let's go over and take a look at the ES Mini. So, you know, we start taking a look at the futures contract let's see what patterns are out there, because folks, life is absolutely about patterns. You want to get your head wrapped around it. In fact, you know, if you really want to be able to impact the folks that are in your life, you want to be able to influence them, which you should be. If you want to be able to lead them, folks, what you want to be able to do is understand the patterns. You want to understand the patterns that the folks that you work with or that you are living with, whatever it might be. You want to understand people's patterns, because the question is, how do you meet their needs? Well, you meet their needs by understanding patterns. When it comes to the marketplace, there are patterns that are repetitious. They go on, and for whatever reason, we just know that we're able to measure them utilizing tools, whether it's ABC patterns, whether it's retracement or expansion patterns. So let's go over to the ES Mini. That's the 30-minute chart, you know, and it doesn't really matter what the jobs report was, although I hear it was good. Really, for me, I don't really pay that much attention to what's in the newspaper or how the news is going to go ahead and report it, what they're going to report on television, because I can come right over here to a chart. We can take a look at a chart. We can take a look at information there, and that's what we're doing. So we're looking at the ES Mini. Hopefully you're watching us on TigerTV. Now, what I'm going to do here, first I'm going to go ahead and get rid of the expansion and contraction patterns that I've got up here on the screen. I'm going to try to do that. Why can't I do that there? Why is that? Now, there we go. Okay. Got to get those fast fingers working here, folks. So I'm going to get rid of some of those patterns. Now, what I do show out here, I do show on January 30th. So that was this week. Yeah, because it's February 3rd. God, it's already February. How about that? January 30th, 1:48 p.m. That was when we had our last apogee lunar aspect that occurred. And, folks, well, you want to be able to, I mentioned this to you on the show, you want to make sure that you actually have the ability to go ahead and mark those on your chart. You want to mark apogee and perigee, and basically if you've got the market trading above apogee, especially if you're in the futures marketplace, you just simply want to understand where you're at here. And we can go back. That other red line here is the last time that we had the perigee. No, that was our 3 drive to a bottom, and our bullish engulfing. But look, let's first take a look at the ABCs, okay? And we're going to create an ABC pattern, and we're going to start down here at 10:30 in the morning on January the 30th. That is our A point. On the ES Mini, we're looking at 1296. So let's go up here and let's get our formation tool, our A to B tool, if you will. We're going to start down there, and the high came in. Let's see if the high was right around 6:30 in the morning, up at 1750. 6:30 in the morning on January 31st. Let me just make sure that was the high. 13, yeah. So 1750. That's going to be our B point, A to B. Now, what you do is you have A to B equals C to D, and sometimes you can go below, right? You can go right through that point. Well, here what I've got on my chart here is you're seeing your A to B point, and this is where your C equals D. This first line right up here says 1323.76. If you could actually see it over here, it's even hard for me to see it with these binoculars on that I've got, but that is our D point. So that first level that you see, that first little level there, that is where our A to B equals C to D. Now you can see during the C to D leg here, you can see that price was over on the right-hand side, meaning that the move of the A to B was just slightly stronger, if you will, than that C to D leg. And so you can see that we just simply camped out here. We camped out, if you will, or not we, but the market participants have been camping out at that 1-to-1 level since about, February 1st, since around noontime. So right around noon is about when that level, it was penetrated just by a little bit, pulled back, just simply moved sideways. So we've been going sideways, and this is a 30-minute chart, since 12 noon on February 1st. Well, it's February 3rd, and you talk about a breakout right above that high here, and you broke out with this long-range bar. But what does that breakout mean? I should have Tom's book in here. I absolutely should. Maybe one of you can look it up in the Art of Timing the Trade, folks, because I will bet you somewhere in that book, when he's talking about A to B equals C to D, what he also shows is that if you do a 1 to 1.618, then you have a automatic trend reversal. So what do we have going on here? We have a little bit of divergence, don't we? We got King Dollar. King Dollar is up 28 ticks right now. You have this wide-ranging bar. What you could be is a possibility here of a blow-off top, folks. This is a situation where if you were short and you were in the market here, the short simply got pushed out. Now, we have to just simply take a look at probabilities. You have to understand patterns that are out here. And you've got to be able to have a strategy on how to trade this type of market. You've got to decide whether you're going to jump on board. Maybe you're going to punch a ticket and wait to be picked up. But there are different strategies to use. But one of those strategies is to recognize patterns. So let's see what else that we've got out here. So on this 30-minute ES Mini, because really we're talking about 500 stocks, if you will, that make up the S&P index, so we're going to get a better breadth than just simply going over and taking a look at the Dow. But what you can see is the ES Mini, a 1 to 1.618, takes you to 1337.09. Where did we get up to so far? Well, in the last half hour, you got up to a high of 1336.75. 1336.75 versus 1337.09. Are you kidding me? Does this stuff work? Are you folks, appreciating, what it is that Tom's been able to teach us? What's in his book? If you don't have the book, please spend the money, go over to, your local store or Amazon, what have you, and get that book. You have to have books in your library because you want to understand what's going on in the marketplace. That doesn't mean this area can't be taken out, but what other pattern do we have that's going on out here? Well, we take a look at swing points, right? And if I just blow this chart up a little bit here, don't worry about, how close the lines are together. A swing point is where you see an automatic trend change. Well, if we take a look at the last automatic trend change, if you will, I would go back to 10 o'clock in the morning on January 26th. The high there in the ES Mini, 1329.75. Well, we know that our other trend change was right down here where we formed that A point. So let's take our Fibonacci ruler, our expansion. So we have contractions, expansion. I'm going to start at the top of that swing point at 10 o'clock, come all the way down here to the bottom. And what else we have here, let's go ahead and just compress this screen just a tad. And what you will see is right here, a 1.272 expansion is right up here in that 1338 range. So you got 1338 and 1337. You've got two patterns converging. Is it any wonder that the ES Mini stopped right in this area. Now, that doesn't mean that it can't be taken out. But, folks, what you want to do is this is the area. Here is where the battle is going to be fought today. You know, you can see there wasn't really much of a battle going on right down here as we made our 1-to-1 A to B equals C to D. But absolutely, you know, you've had the market push up. And where did it push up to, folks? It pushed up to an area of resistance that would be normal, just simply patterns. See, you want to understand these patterns, and you also want to be able to understand maybe just the pattern within yourself. Maybe what you were just simply anxious that maybe you had missed out on this move if you were taking a look at this from a stock market standpoint, and maybe you were thinking, geez, I ought to jump in right away. Well, you know what, folks? I think you've got to wait until this support area here gets taken out, because you are at the completion of two patterns, if you will. And so, you know, make your own decisions, but understand where it is that you're going. And the easiest way to do that is to understand where you've come from. That's what ABCs are all about. That's what expansions and contractions are all about. And, folks, I love being here with you. Hopefully you're having a great Friday morning already. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Nine two seven 6648, and you got the futures absolutely are up right now this morning. Still got the Dow futures up 103. You got the ES Mini up 12 and a quarter. The Nasdaq up 22. King dollar though. King dollar, folks, will be watching that today, up 30 cents. In fact, that's what I've got on my screen here. So hopefully you're joining us on Tiger TV, and we're going to continue to tour around the markets. Actually, if you take a look at the DAX, you got the DAX trading up 85 points right now. FTSE up 71. The Nikkei over in Asia was down 44 points last night. Shanghai up 18, and the Hang Seng up 17.5 as well. Now, on my screen here, one of the things that I've been showing, we either took a look at it during the Money Master show, which follows this. Tom and I do that today. And then in the on-deck circle, we got Basil Chapman. And then it's health. It's all about health today. We got our man, Mr. Nico DeHaan, and David White will be warming things up for the Tom O'Brien show. David will be doing that from 3 to 4. Tom, obviously, 4 to 6, folks. And King Dollar. My King Dollar hat's just out of reach. Otherwise, I would put it on. And when we're taking a look at patterns that are out there, and it's so important just to, be able to take yourself away from the news, just come over to the charts, take a look at it, because this is reality TV, if you will, here. And when we take a look at the patterns, how these patterns repeat, why there's certain areas that hold as resistance or as support, it's just uncanny the way that it works, but it does work, and it's a tool, and it doesn't matter whether you're math-oriented or whether you're art-oriented. We can teach you how to trade. I want to be able to teach you how to trade. I want to be able to teach you how to attain financial freedom. If you're already there, I want to teach you how to be able to get more so that you can do more for others in your life. Well, you take a look at patterns here. This is a butterfly pattern that we're taking a look at in the King Dollar, if you will, the U.S. dollar index, which completed here. It was a 1.618 expansion. On January 13th, there was a 1.618 expansion of this swing right out here from December 19th all the way down, just 2 trading sessions down to the 21st. And when you do a butterfly, it's an expansion, folks. An expansion, I just simply I visualize just simply wrapping a rubber band around my finger. And maybe because as a kid, I had probably done that before. So that would be the catapult, if you will. And when you do an expansion, instead of just that normal, if you will, you go even a little bit further, even a little bit stronger. Well, there's really 2 primary expansions that we look at here, 1.272, 1.618. Or the next one above that, that's 2.618. That's when you wrap it so hard that you're just worried that band is going to break. Well, when you have that type of energy, okay, and when you have that type of energy, what you'll often do is you'll do a 1.272 expansion down to the bottom side. That is exactly, if you just simply go measure from the low of December 21st all the way up to the high here on January 13th, and 1.272 came in at 78.87. Just like when we were taking a look at that 30-minute ES Mini, this here is a daily chart. Look at how we just simply camped out at this level here. Maybe they were making those s'mores or something like that. Just camping out here. Couldn't bust it down, and now King Dollar is trading higher. Now, I've got a new computer set up in here right now, and so I don't have the ability to just simply throw up that correlation chart. I'll make sure that I've got that either worked out by Monday, if not sooner. But, that correlation, folks, is just simply, it's a directional correlation showing that when the dollar is stronger, that the market is weaker, and vice versa. And, we do have some divergence here because you got the markets up strong and you got King Dollar up strong. And the question is, who is going to give? Who is going to win out? That's why I say there's divergence here, and why you want to be able to take a look at the different charts that are out there. What is King Dollar all about? Now, let's just say that King Dollar, the normal bounce here for King Dollar, we'll just simply go up to the high right here on January 13th, all the way down to the low. And what you'll see this little red line. So $80.01 And we're not going to worry about the penny. So we're just going to say $80 in the U.S. dollar index. That is the most logical bounce area. That's the first place where we would bounce. If you came into that today, for example, if King Dollar were strong, you would have one heck of a move off of the bottom here, and that would tell you that you're likely going up into the 80.78, 81 area, more likely, where you'd start to get up into the swing point here from January 13th. Well, what's King Dollar all about? What's that? That's all about the currency market. Let's take a look at the euro. The euro is right at a place where you should be expecting a little bit of support. But the problem is, this is a 30-minute chart that we're looking at here on the euro. And look at these bars on the way down here, folks. These are long-range bars. Those bars, and you've come down to a 0.786 retracement. Again, this is on the 30-minute chart. That really suggests that this area is not going to hold. When you come down with long-range bars and you're coming into a 0.786 area, and look at this. This is 1.19. It's really close enough to 1.272 expansion off of the last major swing on this 30-minute chart on the euro. That was done at 7:30 a.m. just a day ago, yesterday morning, folks. So 877-927-6648. We're going to go see how this market pops, how it opens, and probably by 10 o'clock when we're going off the air, we'll have a good feel for any kind of volume or not in this marketplace. We'll be right back, folks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races on this Super Bowl weekend. You got the Dow up 116 points right now. S&P's up 12. Composite up 28. Small caps up 11. NDX up 21. Dollar index up 24 ticks right now. Gold only trading down $8. You got silver off 22. Light sweet crude up 81 cents. And, if you want to also take a look at what else is popping and what else is... in the pre-market there was Zoltec. That was up about 26%, up $13.42. That was up pretty big. Let's take a look, see what else is popping and dropping here right off of the bat. You got Gilead Sciences, GILD, that's up 4. You got the Direxion shares in the financials, FAS, that's up 430. We'll go take a look at the XLF. In fact, let's go take a spin over there right now. Let's go see, because the XLF is trying to complete a Tiger Gartley, folks. You go to page 222 of Tom's book, The Art of Timing the Trade, and you can learn all about these Gartley and butterfly patterns. And where are my spiders up here on this new set of charts? Where are we? There we go. So let's go take a look at the financials. That's why you got the FAS up here. And you got the financials trading out at 1461. Now what you'll see here is at 1480, 1480-ish, right, folks? Because we're not going to be right on the dot here. But right at that 1480-ish area is a 1.272 expansion off of that October 27th swing point. What else do we have setting up there? You've got a 0.618 retracement going all the way back to February 22nd. And the high on the XLF up there was at $17. So now, what you do have here, and so this is what you got to be paying attention to, is we have a gap up. So you've got several gaps here, in the XLF, but we're gapping up, if you will, into that price point, into 1481. Now, you're trading, as I say, 1460. Again, only been open just for 6 minutes here. 6 minutes, you've done 3.8 million shares. I'm not about to do that math in my head. But, what we can do is we can do this, right? Say, Steve, just go ahead and take the chart down to a 5-minute chart. Let's just do that and see what we've got volume-wise. So that's a good suggestion. Thanks for throwing that out there. So now we're taking a look at the 5-minute chart on the XLF. And what you can see here is that we're already into our second 5-minute session. So you did 2.2 million shares during that first 5 minutes on this gap up. As you take a look at volume down here, let's come down here and see what other volume bars we've got. If there's anything of significance, you can see you've got volume that's down here. So if you were taking a look at the XLF, its next area of support, if this decides to pull back, let's pull this back even a little bit further, see where we've got our highest level of support on the XLF. It's going to be here on that 5-minute chart, if you will, folks. Looks like it's going to be right in the price point of the 1426, 1429 area, which is really right in that B point. I think that B point is 1417. Let's take a look at this on a 10-minute chart. Let's just keep... We dived inside it. Now let's just back it up a little bit at a time. And because, for an extended rally, you're going to need the financials to go along. You're going to need the XLE to move along. And that's just taking a look at the S&P, if you will. And so that's what we're doing here. So as we take a look at let's just take a look at the expansions that are going on here. I'll just throw that tool up just to see if there's anything of significance that pops out. No, let's back it up to a 30-minute chart now and see what it is that we have out here. So on the 30-minute chart, what you can see is right here, this swing point that kind of pops out at us at 10 o'clock on January the 19th. The high there, 1410, you did 24 million shares. So that would be if the XLF backs off, or when it gets up to, let's say it completes the 1480, the Tiger Gartley. Well, then if you're wondering, okay, if you're going to go ahead and short that index, if you will, where would it back down to? Well, you'd start taking a look at the XLF, probably on a 30-minute chart, getting into that 1410 and finding its first area of resistance. So let's go ahead and back it up. Let's just see if we go now to go back to our daily chart, and just simply let's take that C to D leg that is forming out here. Hasn't completed, but let's go ahead and take that C to D leg. Let's go all the way up to 1480. And you can see that the 0.382, that is the normal spot, folks, if you will, where you're first going to bounce down to. And this makes sense here, because if you go from the low, we were taking a look at January 25th, so that's the more conservative, if you will, A to B equals C to D in the retracement there. So the more conservative approach of taking a look at 0.382 gets us down to 1363, right here into that October 27 swing point. Right now, the top of that is going to act as resistance, as support. As support. Why? Because you have 232 million shares. You're up above it until you can close back inside the range, inside that candle. When I say inside the range here, that area will act as support. And so in order for this pattern to complete and to pull all the way back to the 0.618 area, you know what you're going to want to see is you'd want to see more volume. That was pretty smooth, Steve. I just simply got rid of that support line so you couldn't see that there. So that's on the XLF. Let's go take a look at the XLE out here and see what we've got going on in the energy sector. And then what you want to do with these ETFs, folks, if you trade them. So if you're trading the FAS or the FAZ, you want to make sure you understand that the underlying ETF that it's really trading off of, is in fact the XLF. So you want to be able to understand what's there. But then, just like we were diving down, we were doing some scuba diving, if you will. Not snorkeling, because we were diving down deep, right? We were going in and taking a look at a 5-minute chart, if you will. Well, what you also want to be able to do, folks, is you want to go and take a look at the actual instruments. You want to see what because these are weighted indexes. So in the XLE, for example, you can go over to the Spiders website, SPDR website, and you can click on the ETF, and after you navigate, because it doesn't just jump out at you, but if you navigate for a minute, you can download the exact weighting structure inside there. It updates every evening, usually just after 4 or 5 o'clock, if you will, so you know exactly what the weighting is inside there. And then you can take a look and see what's going on in those top couple stocks. In fact, if you just paid attention to 10 stocks in there and you understood where the patterns were completing to the upside or the downside, if you will, it would give you a better indication of how to actually trade those doubles, those triples, or even just the underlying index itself. In the case of the energy sector, I know that we can just simply go take a look at Chevron and ExxonMobil and get a great feel for what's going on. Well, in the energy sector, you can see we've gapped up this morning, and all the energy sector is doing right now is just simply in that October 27th area. Remember, the XLF was up over that October 27th area. The energy sector has not been able to get up over it. It tested it, came close to testing it here on January 26th when it got up to 73.16. The actual top of that swing point is 73.19 going back to October 27th. And so what does that tell you when you're taking a look at these ETFs? The energy sector, right, which makes up I think the weighting structure inside the S&P first is technology, the XLK, and then second, I believe, is the energy sector, and third is the XLF. But I know I've got somebody watching my back in the den, and they'll tell me if I've got that in correct order or not, or maybe I might have reversed the financials with the XLE. But I think the energy sector is numero dos, if you will, number 2 in there, and this can't get up over the October 27th area. Yet we know that in the diamonds, we're up over October 27th. Heck, that's been up over October 27th and been at the party for the longest period of time. The S&P is up over October 27th in general. You've got the small caps up over October 27th, and NASDAQ up over the 27th. Yet the energy sector, which is the second largest sector inside the S&P, can't get up over that. So what clue might that throw out there to you? What do you think? Would you say that shows strength or weakness? I agree with you. I say that shows weakness. So let's say this market happens to be nothing more than a washout of trying to wash out all the shorts in the marketplace, because we have had absolutely no volume on the way up and absolutely no volume on the way down. Well, on the way down, if you go take a look at the swing points out there, if you take a look at the energy, in fact, if you know, I know that David White is getting real close to being able to release, the art of the chart. Absolutely great software out there. And if you were, and you tune into his show today at 3 o'clock, he will show you the lack of energy and conviction on the way up compared to the energy level on the way down. And we're talking energy right here. I'm just a bundle of energy, if you will, but what this is telling you, and so I'm giving you a clue out there, folks. If you were looking to get an indication of what's going on in the marketplace, I would say pay attention to the energy sector. It's already giving you an indication. Your best trade on this, boy, would be a beauty if you could get up and just get over that October 27th area. On lighter volume, you've got 31 million shares on that, and then you could go ahead and you could fire away at the DUG, or you could go ahead and fire away at the triple, which is the, can't remember it off the top of my head. I don't know why. And let's just dig down here a little bit deeper. So let's go into that 5-minute chart here on the XLE. See what we see here. The ERY. Thank you, Terry, in the den. And folks, the den. If you've never tried out the den, what are you waiting for? What are you waiting for, folks? You want to be able to take control. You want to be able to change things up. When we began the show, I talked about a strategy. ERY and ERX. So now, so we've got the long and the short, if you will, out there. And it is all about strategies. One of your strategies absolutely always needs to be surrounding yourself with a different peer group. A peer group, that not just one notch above. Because if you just go one notch above, what's going to happen with the results you're going to get? Not even a full notch. That's why we've got the den, because the den, folks, those are a group of folks that are sitting there up at that outstanding level. And what do you get at outstanding, folks, when you punch through? You get extraordinary. And so it's an extraordinary group of folks. You want to get in there because, it's great because we've got a whole group of people that are covering our backs, and it's a beautiful thing that Tom has set up here. Take a look at the XLE on the 5-minute chart. You can see how we popped up here from a volume standpoint. It did 471,000 shares. No big deal, right? No big deal. With regard to the volume, you start taking a look at the bars that are out there, and now it's pulling back. It's pulling back with about the same number of shares, 400,000 shares. So it's not giving us an indication other than when you take a look at that daily chart out there. That daily chart, when you compare this to this, let's go over and take a look at the actual SPY, if you will. And so let's pull up the old SPY here, the SPY chart, and you can see that we're up over the October 27th area. And so you got the SPY up over October 27th, and the energy sector not playing along in the game. Something to think about. Absolutely something to think about there. In fact, let's go over to the pull-up. Let's do this. Let's go ahead and pull up ExxonMobil. As I navigate around here to find, I got my tools that are a little bit different than my normal system here. So we got XOM, that is ExxonMobil. Let's go see what ExxonMobil is doing. And on the ExxonMobil chart here, folks, you can see ExxonMobil, which is like number 2, right? I think Apple has taken over the weighting structure as number 1 in the SPY, and right behind it is ExxonMobil, and ExxonMobil absolutely doing nothing. In fact, if it's doing anything, it has been moving down. It took out this swing point right here, did this yesterday, actually did it a couple days ago. So this swing point that we're looking at is January 13th. Let's see what ExxonMobil is telling us. 15.5 million shares, and when you came down to that swing point, you did that on January 31st. 27 million shares. Hello, anybody out there listening? Yeah, so it's taken out a swing point. It's taken it out on volume. Maybe ExxonMobil here, does a little bit of a retracement, but it's taken out that swing point. What's that shooting for next? Well, the next swing point is December 14th. It's got 23 million shares on there. Still a nice looking chart. If we just simply take a look at just coming off of, let's see here. I want to do that. Let's just look at, let's see, how about the completed patterns? Let's take a look at an ABC. Let's take a look at the easy one out there that it should have completed here. There's our A to B equals C to D. So you can see ExxonMobil completes that A to B equals C to D. What else as we come all the way over here to the side? Let's take a look at, look at that candle right there. Does that candle look familiar to you folks right here? This here up at the top, let's pull it back even further. Right here up at the top, as ExxonMobil was testing its highs going back here to February of last year, February 23rd, made this bearish engulfing candle. You want to be paying attention to what the candle signals are, especially as you're making highs or lows. And so you're coming, let me just back this up here. You were coming right into that bearish engulfing candle. The low on that candle happens to be happens to be 86.47. Now, you only had 18 million shares coming into that. And let's see where, let me just draw the ruler here across the top. That way I don't have to estimate anything. And it looks like we just simply never got all the way up into it. As you were coming up, though, you were coming up with 15 million shares. That is on the January 23rd date. So you got 18 million over there on the bearish engulfing candle right here, and you're coming into it with 15 million shares, almost 19 million shares, or 18.6. Coming in, didn't have the energy on the way up. You make an ABC pattern, if you will, and then what do we have over here? What's this look like to you? Does that look like another bearish engulfing candle? Does to me. What's a bearish engulfing candle, folks? Well, as the market is moving up, that's the only time that you can make them. The body of this candle right here on January 26th has to at least engulf the entire candle right here. Well, that means that you'd look at the 25th, you'd say, where did the 25th open? It opened at 86.77. That means on the 26th you have to close at least at 86.77. Where does it close? 86.77 on the bot. Well, on the bot. How about on the dot? How many candles does it engulf? It engulfs the prior session here from January 24th. It engulfs this session here up at the high January 23rd. It engulfs this candle here from January 20th. So you've got 4 candles up at the top after making an A to B equals C to D. And is there any doubt as to why the XLE is not participating in the party going on in the markets right now with the S&P's up 12.5, Dow up 120? Seems pretty evident to me, folks. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Folks, 877-927-6648. Always such a thrill to be here. Hard to believe it's already Friday, but it is Super Bowl Friday. So, hopefully you're getting ready for, hopefully it's going to just simply be a great game. So we got something to really talk about on Monday morning. So, and stay tuned because following this show, you got Tom and I doing the Money Masters, Basil Chapman in the on-deck circle, Nico Dahan getting in here. He's going to get us fit and trim so that each of us can eat chicken wings on Saturday. I got to ask Nico what kind of Super Bowl food he eats on Sunday. And in any event, folks, let's take a quick tour around. You've got the Dow is up 125 points right now. S&P is up 13. Composite up 32 points. Leading the charge is the small caps, up 1.4%, up 11.5 points. Apple trading up $1.74. Out at 456. You got Cisco's up 27 ticks. Google up $6.42. MasterCard having another strong showing today, up $7, $7.74. Chipotle, is that how you say it? Not chip? No. Okay. Well, I don't know how to say it. I used to call it Chipotle, and my kids tried to. I haven't been there. I guess I should go over there and give it a shot because you know what? Restaurant stock is selling at $370 a share. I got to go see it's taking a while, right? So I'll go over there. Google trading up, as I said, $6. You got the CME Group trading up 488. Gilead up the same 488. On the downside, Edwards Life Sciences down about 690, down 8%. Wynn Resorts trading down 4. What else? Dresser Rand is down about 8% as well. That's down $4. What else do you have here? Hanes International. I guess that must be the Hanes clothing company. They're down a bit. Let's take what should we take a look at? Let's go take a look at Apple out here. See what Apple is doing. Let me get my stock symbol thing here. So we got Apple AAPL. See what Apple is doing. See what kind of party Apple is throwing here for the Super Bowl. Just hanging out at the top right here. And, folks, you just simply have got to be careful. We've got to be careful with this stock here. And the reason why I say that is because, it's just forming this island base up here. This gap will get filled. Hopefully as it gets filled, though, folks, it's coming back and it's coming down on some lighter volume, if you will. This gap will not stay open. You have had great earnings, if you will, but you have not had a change in, any company ownership or something like that. And if you go back, you take a look at the Apple chart, what you'll see is you will see these gaps do get filled. Where does Apple have some additional upside to right now? Well, that additional upside, for me, I would just simply be taking a look at the expansion going back to October 17th, down to the low that was put in on November 25th, the day after Thanksgiving, and I'd look at that 1.618. That's right up here at that 465 level. Again, you're trading out at 456. Wouldn't take very much for Apple to get up there. Apple not really participating a ton in this rally that we have that is going on. Let's go take a look at that Chipotle start out there. And let's see here. I'm just having fun my daughters were listening, they would love that. CMG is the ticker symbol on that, and so not really. You had Chipotle. How's that? Oh, I got the thumbs up from our production manager. Okay, so we got Chipotle, and yesterday you came down with volume. Didn't break any swing points or anything like that, but you did back off 1.4 million shares. So far today, in the first 20-some-odd minutes of trading, 28 minutes of trading, you've done 185,000 shares. Going to need to do a lot more than that today, folks. Folks, have a wonderful Friday. Make sure you got the right strategies in place. I'll look forward to seeing you 9:06 a.m. sharp on Monday. Stay tuned for Tom and I. Have a great weekend.